Cengage Group is committed to offering you and your family a benefit package that promotes your overall health and well-being. I know you're excited to learn more about the comprehensive medical, dental, vision, and tax savings benefit plans available to you. Choosing the right medical plan for you and your family is an important decision. We'll provide you with a brief overview here, and once we're done, point you to additional resources to support you. When it comes to medical, Cengage Group offers 3 plans. All plans cover preventative care at 100%, and each plan offers prescription coverage. Let's start with our 2 high-deductible health plans, also known as HDHP. Obviously, these plans have a high deductible. I know, shocking, right? The deductible is the amount you will have to pay before the plan starts covering costs. You'll find the paycheck deductions for the HDHP Basic Plan is the lowest of the 3 medical plans, with the HDHP Enhanced Plan not far behind. With these plans, once you meet the deductible, you pay either in or out of network coinsurance on the balance. These plans also include a tax-advantaged health savings account. Cengage Group deposits free money into it on a bi-weekly basis. Check the enrollment guide for HSA funding amounts, which varies based upon which HDHP you elected and how many dependents are covered. In addition to company funding, you are able to deposit pre-tax funds into the account via payroll deduction, subject to annual limits. These funds can be used now for qualified medical expenses or to pay that high deductible, or you can save them for retirement. The HSA is yours, even if you leave Cengage Group. Prescriptions are subject to the HDHP deductible until it is met, unless your preventative medication is on the HDHP RX preventative list. However, once your deductible is met, then, just like the PPO plan, simply pay a copay or co-insurance depending upon the type of prescription. The PPO plan offers in and out of network coverage. The big difference with this plan compared to the HDHP plans is with the in-network doctor office visits. You don't have to worry about a deductible, you just have a copay. For other services like hospital stays and lab work, you'll have an annual deductible and co-insurance. For the PPO, the prescription benefit varies depending upon whether you use generic, formulary brand, or non-formulary brand drugs. With this plan, in-network prescriptions are not subject to the deductible. You just pay a copay or co-insurance depending upon the type of prescription. Please note, for medical plans only, if your spouse or domestic partner has access to medical coverage from their own employer but still enrolls in the Cengage Group medical plan, you will pay an additional $100 per bi-weekly paycheck. Regardless of whether you elect a Cengage Group medical plan, all benefit-eligible employees are able to elect the hospital indemnity, accident, and critical illness plans. For a small premium, these plans pay a fixed dollar amount to the employee when a member has either a qualified inpatient hospital stay, a qualified accident or injury, or has a covered illness or condition. Check out the Benefits Enrollment Guide for more details on these extra layers of financial protection. Flexible spending accounts. We talked earlier about the Health Savings Account, HSA, that is a part of the high-deductible health plans. Let's talk about 2 other tax-advantaged plans you should consider. A Healthcare Flexible Spending Account or a Dependent Care Flexible Spending Account. We call them FSAs for short. The Healthcare FSA allows you to contribute up to the IRS annual limit per calendar year on a pre-tax basis. The money can be used to pay for eligible out-of-pocket healthcare expenses. If you choose to enroll in this plan, you will want to be thoughtful about the amount you choose to contribute, because at the end of the year, you can only carry over a max of $680 to an account for the next year. The rest is forfeited if not used. Also, for those employees who enrolled in one of the HDHP plans and therefore have a health savings account, due to IRS rules, you can generally only use the FSA for dental and vision, not medical expenses. This is called a limited healthcare FSA. The Dependent Care FSA allows you to set pre-tax money aside to pay for eligible dependent care or elder care expenses to the tune of a max of $7,500 per year. But unlike the Healthcare FSA, there's no carryover at year-end. It's use it or lose it. You'll want to be really careful about selecting an amount you'll definitely use during the year. For both FSA accounts, you'll need to submit your eligible expenses to these counts for reimbursement throughout the year, but no later than March 31st after the end of the plan year. That about does it for health plans, but we're not done. Let's chat about those pearly whites. Your dental care plan. You are eligible for one of 3 dental plans through Cengage, a PPO, PPO Plus, or Dental DMO plan. All 3 plans cover in-network preventative care at 100%. The PPO Plus dental plan provides more coverage than the PPO, but it costs a little more out of your paycheck. With both the PPO and PPO Plus plans, there is a deductible with an annual maximum. While there is out-of-network coverage in both plans, it is less expensive to use in-network providers. The plans pay a percentage for basic services, like fillings, after the deductible, and a percentage for major services, like crowns or root canals, after the deductible. If braces are in your future, you might want to consider the PPO Plus plan, as the PPO does not cover orthodontia. With the DMO plan, the most important difference is there is no coverage for out-of-network providers. That's right, no coverage. Depending upon where you live, the DMO network may be limited, so you need to make sure that your dentist of choice is in-network in order to elect this plan. When you go to enroll in this plan, you must indicate who your primary care dentist is. If you don't list someone, it'll be like you have no coverage. Other than that, the DMO provides a really high level of coverage and is an inexpensive plan. It covers braces too. It does not have a deductible and has an unlimited annual maximum. Be sure to check if your dentist is in-network before electing this plan. That's it for the pearly whites. Now let's move on to those gorgeous eyes of yours. Your vision plan. If you enroll in a medical plan, you'll have coverage for eye exams only. By electing the vision plan, we call it VSP, you not only get coverage for eye exams, but for lenses, frames, and contact lenses too. Here are some of the highlights if you use an in-network doctor. VSP also offers a discount on LASIK and hearing aids. Go figure. Now that you have an overview of your medical, dental, vision, and tax savings plans, you'll want to check out the Benefits Enrollment Guide. And don't forget to have a conversation with Alex, your virtual benefits advisor. These resources provide even more plan details as well as costs and enrollment timeframes, typically 31 days from your hire or qualifying life event date. You can also visit the Benefits and Pay app in Workday and the Benefits Hub on HR Central if you really want to take a deep dive. There are tons of useful tools and resources there to help you out. Here's to your health.